New Zealand is one of the leading proponent countries adopting accrual-based accounting. In 1984, New Zealand had faced a fiscal crisis, high interest rate, and the value of the dollar depreciated. New Zealand's budgeting process was based upon a cash accounting system until 1989. With the passage of the Public Finance Act of 1989, New Zealand redefined the government budget process, making it output-based and also require that all budgeting and reporting at the department level use accrual methods. In April 1992, New Zealand produced its first fully accrual-based combined financial statement, known as Crown Financial Statement. These statements are independently audited and very much resemble the GAAP compliance reports of large corporations. The reason why New Zealand migrated to accrual is to improve budget transparency and accountability in the public sector. Accrual basic accounting offers the benefit in improving accountability and improve resources management. Since it presents the real cost of government spending, it is not efficient to record only cash transactions and make management decisions based on cash account alone. It is because the government might receive incomes that are related to a future period. Therefore, it is rational for applying accrual accounting because the proper record of financial and economic transactions, providing a more meaningful picture of the overall entity operation. Another reason is enhancing efficiency in the provision of public sector through performance-based management. Accrual provides complete resources of financial information sufficient to support the government goals. It is the best measure of sustainability and intergenerational equity implication of fiscal policy. The migration was introduced by Prime Minister David Lang and has obtained the support by the Public Finance Act 1989.
Lastly, the impact of migration of cash-based accounting to accrual-basis accounting in New Zealand. First one is asset valuation. Before the implementation of accrual basis, there are limitations to provide a complete picture of financial position, but the implementation of accrual accounting has required reformation of New Zealand public sector accounting to report all assets in the statement of financial position. The information on the historic cost of many assets are not valid by the previous cash accounting system. Migration to accrual basis was to resolve this matter by using the net current value approach in the valuation of asset, where a net realizable value cannot be obtained or is otherwise inappropriate. The second impact is on the development of accounting and information systems. The migration to accrual basis made by New Zealand has required more external reporting made by government entities and departments. Government entities need to publish annual plans, while government departments are required to publish audited half-year reports. However, the provision of regular, accurate, and timely financial information to the Treasury makes the departments experience marginal costs, timing issues, and cultural change in the preparation of its first set of financial statements. Therefore, to reduce the burden of external reporting, New Zealand has been developing a new accounting system that is able to create an accrual accounting environment and establish a stable general ledger software for regional offices. Most government entities applied a computerized accounting system that provides easy and quick access to the information required for financial reporting. New Zealand also has applied the spreadsheet-based system to control information collection processes, which oblige departments to make a number of validation tests since they have a major quality control problem. Hard copy schedules of the information collection process that was completed by the department. Next is the impact on the standard setters and professional bodies. Some advocates of reforms in public sector accounting object to the wholesale implementation of private sector practices in the public sector due to the difference of both sectors. The Accounting Standard Committee need to work together and derive the conclusion on how to solve the above matter. Currently, New Zealand uses IPACS as the starting point for public benefit entities that have a statutory requirement that comply with standard issues. The standards implemented were reviewed on a regular basis to prevent rigidity or conflict with the public sector. And lastly is the impact on the accounting profession. The Public Finance Act requires that the financial statement for the New Zealand government and for each government department should be prepared in accordance with GAAP. The move by New Zealand government to the full accounting structure will significantly affect on the importance and standing of the government accountant. Because of this, their specialized knowledge will be invaluable and will increase the specialist nature in accounting work. To conclude, the changes from cash-based accounting to accrual-basis accounting is generally considered a success to New Zealand financial management. These changes is to improve the budget transparency and accountability in the public sector and enhance the efficiency of the service delivery to the citizen through performance-based management. Overall, by implementing accrual-basis accounting, New Zealand managed to overcome the financial issues and it gives a significant impact on the New Zealand public sector management.